Hi, so this presentation is about whether Himadri Speciality Chemicals can make a comeback. Its stock has been beaten down over the last few years and it's really not taken part in. So Himadri Speciality Chemicals manufacture a wide range of carbon related products. Most of their revenue comes from coal tar pitch, which is called CTP, and that goes into aluminium and graphite industries, so mainly related to commodity plays. Carbon black is more specialized and it goes into industries like tire, semiconductors, engineering, plastics, and so on. Advanced carbon materials are much higher in the value chain and go in as anode grade material for lithium ion batteries, which is related to the EV play. And finally, naphthalene and derivatives, which they call as SNF, again a specialty product which go into the construction industry. These products are used in a wide variety of industries, aluminium, into infrastructure, automobiles, steel, defense, and so on. And in our daily lives, we can see those products being used in inks, tires, EV batteries, paints, plastics, and so on. Regarding the management related stuff, capital allocation has been very mediocre, very inconsistent over the last few years. Therefore, the stock has not been a secular gainer. They have been impacted by the industry cycles as well as very recently the pandemic has impacted demand, and therefore their returns have suffered. uh, Not really delivered big on the advanced carbon material business, which promised a lot, but still, this is still in the anvil, and in the sense it can play out in the short to long term future. And finally, management has stopped doing conference calls, which is not a really good sign. You really want managements to face tough questions when the going gets tough. The company has been struggling over the last few years, mainly owing to reduced margins, reduced intake and demand, and therefore you can see those in the sales growth and in the profit growth, and therefore the stock has not returned really well. Return metrics being poor. It's dependent on old economy related activity like construction and automobiles. So it's though they would want to call them specialty chemicals, most of their revenues comes from CTP, and therefore they are still bound by the cyclicality of those related industries. While looking at the future, gazing at the future a bit, thematic tailwinds, I think this could be potentially an unlock play post COVID. Should be a great start for demand to pick up. Related commodity plays doing really well, Nalco, Heg, Rain, all of them we'll see in another slide on how well they have returned as a stock and how well they're doing as a company. On the longer term, the EV play which shall come into picture and can be a joker in the pack potentially in the future if we want to hold it for a longer time. When we compare Himadri with related peers, you can see the stock really has not done anything in the last 1 year. It's returned mediocrely 6%, while you can see companies like Rain, Nalco, and Heg doing over, more than doubling. So there is an anomaly there, and I'm not very sure why that anomaly exists, because typically they are very related. um, a lot of their products go into such industries, and they play along in the same cycles. So is this an anomaly? Is this price to perfection? Is hard to answer, but I do believe not taking off much in a bull market is maybe an opportunity. On the stock itself, how technically it is placed, it's quite interesting. You can see a massive run up. It did almost 10x last cycle, almost gave away most of its gains, fell 80%. And very recently, even though the price is not like moved up considerably, the volumes are staggering here. So someone's of course exiting and someone's buying, right? So and all big uh, big buying that's happened, and the stock is still not taken off. So this probably, shows this could be a bottoming out situation, and a break above 63 will open up the stock to much higher levels from a technical perspective. So I think there is quite low risk here, but of course the business comes with a lot of uncertainty. So low risk, high uncertainty is the proposition here. In summary, again, low risk, high uncertainty, and potentially high returns over the next 2 years or so. This can be horribly wrong as vagaries of the business are high. The sustainability of a potential upcycle post unlock, whether it's going to last or going to revert back to mean, is anyone's guess. Environmental consideration, pure, it's all carbon everywhere in the company. So over a longish period of time, whether it's a sustainable business itself is questionable. ACM business is going nowhere, at least not being communicated well by the company on where they are taking the ACM business, but that could be the joker in the park, right? So, so there is a risk of remaining where they are right now, but the good thing is the stock doesn't seem to have much more correction left in it. Possibly up moves would start soon, and there is a lot of upside potential in the high value segments of the company. So this could be potentially an outsized winner. So if you found this presentation useful, thank you for listening, or apologies for wasting your time. Thank you.